In the ever-evolving landscape of cryptocurrency, the potential approval of a Bitcoin ETF has become a focal point of monumental change and excitement. The anticipation has reached a fever pitch after a favorable ruling earlier, and the crypto market has seen its fair share of ups and downs, including a recent bout of fake ETF news causing price fluctuations. Welcome to Finance Sense. If you find value in this content, please like, subscribe, and share. One key figure contributing to the optimism surrounding Bitcoin ETF approval is Cathie Wood, the renowned founder of Ark Invest. Wood's confidence in the process was underscored when the U.S. Securities and Exchange Commission, also known as the SEC, requested additional information from her firm, Ark Invest. This request is seen as a positive sign that the SEC is actively working on the Bitcoin ETF approval process. Once approved, trillions are expected to flow towards fresh buying in BTC. Cathie, one of 9 applicants for a spot Bitcoin ETF, spoke about it. It looks like the SEC is going to be forced to approve a spot Bitcoin ETF. What communications have you had with the SEC about your application? And where are we in this whole thing? Well, it was publicized and disclosed last week that we had responded to the SEC's request for information around our Bitcoin filing, and that's basically all we can say at this point. Many people think that the fact that the SEC chose to ask questions is a change in behavior, and therefore hopes are rising that one or more Bitcoin ETFs will be approved. It appears that the court is going to issue a mandate about how to enforce their decision to the SEC, and the SEC is likely to follow that mandate. Everyone is assuming that they'll probably approve most of the Bitcoin ETFs by the end of the year. Wood's bullish outlook on Bitcoin doesn't stop there. She has boldly projected a price target of $1 million for Bitcoin, a forecast she has reiterated multiple times. Her optimism has resonated with many in the crypto space, and it appears that her predictions might already be influencing the market. In just a matter of days, Bitcoin, which had been trading around $26,000 for months, surged to $30,000, reflecting the growing enthusiasm for the cryptocurrency. Moreover, the looming Bitcoin halving event in the first half of next year adds another layer of excitement to the mix. Historically, as the halving approaches, Bitcoin's price starts surging months before the event. This historical pattern has many investors and analysts speculating that a significant price jump might be on the horizon. Which leads us to discuss the potential of another 2 Bitcoin-related investment opportunities. The first of these stocks has skyrocketed by over 130%, and the second by an astonishing 160% during this year. These remarkable gains significantly outshine Bitcoin's 80% increase during the same period. The first on the list is Bitfarms Ltd., ticker symbol BITF. Bitfarms is poised to emerge as one of the most promising Bitcoin mining investments, with a tremendous potential upside of over 300%. What sets Bitfarms apart in the world of cryptocurrency mining is their unwavering commitment to efficiency, a safety-first strategy, and a technological competitive edge. One of Bitfarms' strategic masterstrokes is their singular focus on Bitcoin mining. While many competitors have diversified into high-performance computing services, Bitfarms remains steadfast in their mission to be the best and most profitable Bitcoin miner. With mines in Canada, the US, Argentina, and Paraguay, they've mitigated the risk of a single event impacting their entire mining operation. In fact, when one of their mines was struck by lightning earlier this year, their diversified setup allowed them to recover quickly, minimizing disruption. Furthermore, Bitfarms owns an electrical subsidiary that swiftly repaired the damaged site, showcasing their foresight in planning for such contingencies. This geographical spread also insulates them from potential regulatory concerns in any one country. A lesson learned from China's crackdown on Bitcoin mining. What makes Bitfarms truly stand out is their proprietary software, which has made them the most efficient Bitcoin miner in 2023, as measured by Bitcoin mined per unit of capacity. Considering their impressive performance, Bitfarms' fair value has been adjusted to reflect their holding capacity and efficiency, presenting a potential 360% upside from current levels. However, it is essential to keep in mind that Bitfarms' value is directly tied to Bitcoin. If the value of Bitcoin were to plummet to zero, Bitfarms' value would follow suit. The second mining stock on our list is Riot Platforms Inc., ticker symbol Riot. Riot finds itself at the intersection of several intriguing dynamics in the world of cryptocurrency mining. With Bitcoin's long-term bullish outlook, Riot stands as a potential outperformer, but it is essential to navigate its operational complexities and unique strategies. The second quarter of 2023 shed light on Riot's financial performance. Revenue of $76.7 million, cost of revenue at $64 million, and total operating expenses of $91.6 million, resulted in an operating loss of $78.9 million. However, a closer look at the numbers reveals that, to break even, Riot would require a Bitcoin price close to $888,000, when considering both the cost of revenue and total operating expenses. But the company's financials are more nuanced than they initially appear. Factors like income from interest and investments, realized gains from Bitcoin sales, and power commitment credits significantly impact the bottom line. In Q2 2023, after accounting for these factors, Riot's net loss was significantly reduced to $27.7 million. One of Riot's key strategies involves power credits, and this strategy has become increasingly significant in recent months. The company's Bitcoin production has been gradually declining, with August witnessing the lowest BTC mining since July of 2022, even as their capacity has grown. This decline in production can be attributed to the extraordinary heat in Texas, where Riot is located. This led to substantial power credits. In August alone, these credits amounted to approximately $317 million, outpassing Bitcoin mining's contribution. In fact, Bitcoin mining accounted for just 21.4% of Riot's performance in August. These credits are a clear indicator of the challenge in current mining economics, highlighting the disincentive for miners to validate the network. However, the power credits have also sparked controversy, raising concerns among the public and within the broader political landscape. Critics argue that companies like Riot are effectively hoarding energy for Bitcoin mining, which might not align with broader environmental and sustainability goals. Looking ahead, the impending Bitcoin halving, scheduled for the first half of 2024, presents additional challenges. This event will slash the block reward for miners, leading to a 50% reduction in revenue overnight. Given the current state of mining profitability, this could intensify the pressures on miners further. Investors eyeing Riot should weigh the advantages and drawbacks carefully. While there are significant risks, the company's strategic positioning in the world of Bitcoin mining makes it an intriguing choice for those who believe in the long-term potential of cryptocurrency. If Bitcoin experiences substantial gains, then Riot could shine as a bright star among its peers. In conclusion, the potential approval of a Bitcoin ETF and two promising mining stocks, Bitfarms Ltd and Riot Platforms Inc., is generating tremendous excitement in the cryptocurrency space, and influential figures like Cathie Wood are driving optimism. As we've discussed, this approval could lead to significant investments in Bitcoin and further price surges. If you found this video informative and insightful, please consider subscribing. Until next time, this is Finance Sense. Happy investing.